I'm going to take you out for a second. Live from Long Island, New York. Hi, I'm Ryan O'Neill Williams, and right below me is my co-host, Agnes Amisano. How are you doing, Agnes? Good to see you.
Good to see you too. I'm doing wonderful, wonderful, wonderful.
Great, great. We have an
I have to tell you, I have to remind you that I had a quite unexpected visit from my old classmate from high school. It
Yeah,
was such a
really?
pleasure. Yeah, it was such a pleasure to spend time after 30 plus years not seeing each other and seeing how wonderful musician he became and a father figure. It's like we were staring at pictures from high school, like who we were then and who we are now. It's such a huge difference, but it's inspiring, and it was very, very nice to see him and spend
Okay,
time with him.
good. All right, good, good. I'm not surprised that you had people over because I know you love to entertain, but I know you were a little not anxious, but you were definitely apprehensive about this visit. You weren't exactly sure because that's great to hear that it went very well. Anyway,
Yeah, it was fantastic. Beautiful
okay,
surprise. Yes.
excellent, excellent. So
Yeah.
very much a welcoming thing. Ladies and gentlemen, we're going to talk today with an attorney, attorney Zakiya Watson-Caffe, Esquire from. Well, she's originally from New York, but she practices in both New York and in Georgia. And we're going to be talking about something that can affect anyone who has a mortgage, anyone at all who has a mortgage, because the truth is we're all out here trying to make ends meet, and so are some of these companies. And sometimes the legal wranglings of what's going on with your mortgage are not exactly what you would expect. So in just a second, we'll get going, and then I'll introduce you to Zakiya Watson-Caffe, Esquire. Right. Here we go. Hello, hello, and welcome, Zakiya. How are you doing? It's great to see you again.
Great to see you too. How are you?
I
It's
love that.
good, good,
Yeah.
good.
I love your
Yes,
name. I love your name.
yeah, yeah. It's a nice one. Do you know what that's from? Where is it from? Do we know? Sometimes people don't always know.
It's supposed to be Swahili. I mean, I never looked it up. I was told it was Swahili for intelligent. My first name. Yeah.
Talk about on the nose. Yeah.
Yeah.
So, yeah. I met Zakiya's father about 2 years ago. Yeah, when I was bouncing around, and he introduced us, and basically I've been doing a little bit of work for her, online work. But when we were talking, she brought up this really interesting case that she's working on, this really interesting issue that she is interested on. And I was like, whoa, I didn't realize that this is something that could happen. And it's something that can affect any mortgage, or any person who holds a mortgage, any person who has a mortgage lender who is lender to a lender to them. So the amazing thing is that we should all know about this, but most people do not, because there's so many intricacies. I mean, when you're signing a mortgage, Zakiya, isn't it like a 50-page document almost every single time?
Yeah, there's a lot. Well, 50 would be a quick one.
Would be small. Yeah.
Usually,
Yeah, well,
well, it
usually when you go
obviously
to the
depends.
closing,
It's usually what?
Closing. And obviously it
When you
depends
go
on
into
what
the
side you're
closing,
on.
Yeah. Okay. When you go into the closing. Yeah. Yeah. But it can be
you're depending on having a good attorney beside you.
Yeah.
Right?
That too. That too. It depends on the
So
side.
it depends on what state you're in. New York is one of those states where you have more protection. Georgia, usually it's just the lender that has an attorney at the closing. Most of the parties don't have, which is very, very different than New York. In New York, usually everyone has the buyer, the seller, and the lender all have attorneys that represent them during closing.
Okay, so that, I guess, makes it more possible that some people just don't know what is happening because they may not even have proper representation. But then also during the course of owning a home, you're just hoping you're going to pay your bill and just receive, keep living where you are, right? You're not looking for, hey, there's going to be a problem or there's going to be a situation. Most of the time you're trying to get there. But then you explain this problem to me about lender-placed insurance. Can you explain to us exactly what lender-placed insurance is?
So lender-placed insurance is insurance that is taken out on your property by the lender. So traditionally what happens is the homeowner will obtain a homeowner's insurance policy on their own, and they'll usually look around for the best rates considering on what their needs are, and they will present that to the lender, and the lender will be added as a beneficiary along with the homeowners to that policy. However, in the event that you do not maintain adequate insurance or there's a lapse in your homeowner's insurance, the lender has the ability and will exercise that ability to place insurance on the place insurance on the property to ensure that their financial interests are covered in the event that something happens to the home.
Okay, so basically they're putting additional insurance on your home?
So it's usually done only in certain circumstances. It's supposed to be done when there is no current homeowner's insurance on the home that is adequate. So either the most common situation is that the insurance policy has lapsed, so there's no insurance on the property. But there could be situations where you are designated as a flood zone by FEMA and you don't have flood insurance, so that would be inadequate insurance. So yes, they are authorized to do that, and for good reason. If you were the bank, you would want to make sure that your assets are covered, and they do that with lender-placed insurance.
Okay. To me, it sounds like a good thing. To off the cuff, like in the beginning here, you're explaining it to me. It sounds like they're getting you additional insurance. It sounds like a great deal. Almost like they're looking out for you, right, Agnes?
Well, to me, kind of like that was normal because to every single policy that I have, my mortgage company is assigned to as well. Like me that they need to protect their interests. It's not only I'm making sure that I have insurance on my property,
Right.
but they are like co-beneficiaries, right?
Right.
They're co-beneficiaries on the policy. You have to have that, yeah.
Right. So you do have to. Sorry.
No, go ahead.
I was saying, yeah. So they are. So like you do have to lender. Right. That's normal. Anyone that has an interest in the property. So obviously the homeowners, because they own the home, and then if you have a mortgage on your property, they have a financial interest in the property. So anybody that has an interest in the property is supposed to be a beneficiary on it, and banks will make sure that they're a beneficiary on your policy.
Of course, that they're a beneficiary. But so, what's the problem here? If they're putting this new insurance on my mortgage, basically to protect themselves and protect me, what is the issue?
So it doesn't. So that's two things. Number one, it you are paying the cost of that insurance, and that's usually the big issue. As many years as I've been doing this, I have never seen a lender placed insurance policy on a property that is less than what the homeowner originally had. And it's not pennies, it's usually hundreds of dollars more or thousands more than what a homeowner would have on their property.
So basically, what you're saying is your mortgage payment is going to go up because this insurance is going to go up.
Substantially. It's going to go. It's either the mortgage payment or assuming that you have it as part of your mortgage payment. So generally, your mortgage includes your principal and interest. Obviously, most mortgages will also have what's called an escrow, which you pay into every month, and the lender will hold those funds and pay third parties on your behalf. So what's usually in that escrow account are the funds for your annual taxes on the property, your property taxes, and also your homeowner's insurance policy. So when your homeowner's insurance policy is due, let's say it's due December of every year, they'll take money out of that you've been putting in. They'll take the money that you've been putting in into that escrow account and pay your homeowner's insurance, the company that you have chosen. So what happens is when they put their own insurance policy, because either the insurance policy has lapsed or you have inadequate insurance or whatever the reason is that authorizes them to exercise that right, you being forced to pay that new policy. And if it's hundreds of dollars or thousands of dollars more, you're going to see that increase in your mortgage payment.
Okay. All right. So definitely it's possible that your insurance, increasing your insurance is going to make sure that you pay more. So if I'm paying my mortgage and all of a sudden, Agnes, your price goes up, you're all of a sudden there's an additional charge. It could possibly be because the insurance has changed and someone has put lender place insurance on my mortgage instead of the one that was there before.
Personally, I went through the changes to insurances not that long ago. Number one, the flood insurance, it's going, the rates, although I'm not in a flood zone, the insurance rates are going up and up and up for no reason at all. And when I try to change that insurance, they say, oh yeah, sure, you can go to the private sector, but when something happens, doesn't mean they're going to pay out. So that's scary because you might end up with the big damage and no money being paid out to you for that insurance. When I bought my first home, that was the insurance, like Zakiya said, it was so high that automatically increased the mortgage payment because everything was together, combined. So it was a couple hundred more until I started doing research and I changed insurance companies out of state. That automatically, and I kid you not, there was a couple thousand less a year. Thousands. So that saved me thousands less. Yes. So yes, that's a wonderful point that you're making, Zakiya. This insurance, you have to watch exactly. You have to watch what you're saying. What kind of insurance? What you in the last 2 years, my insurance company actually just included insurance for act of God insurance.
Mm-hmm.
Otherwise, I had to have that separate because they would just only cover fire. Then you have to get flood, and if you have a tornado, God forbid, that's not going to happen. Oh, and they just told me actually if tornado will rip my roof off and I have a leak inside the house, they will cover. But if there is just a leak through the roof without hole being damaged through the tornado, they're not going to cover that.
Yeah.
Which to me is fascinating. So Zakiya, I guess what I'm going to ask you next is, are they putting insurance on your house that is actually covering all the eventualities, all the problems when they put this lender-placed insurance? Because that seems like the second danger to me. Number one, now I'm paying more, and I may not even have the money to pay more. But secondly, now I'm getting this other insurance that I did not choose, that I did not take the time that Agnes took to put, carefully and get all the coverages on my insurance. Is it possible that they could put something that is less than what you would actually desire as far as coverage is concerned?
I can assure you that whatever insurance they place on is not one that you desire at all. It's just not. So they're not going to look at your policy and say, well, this is what she had, this is what she wants. No, that's not. They're going to look at a policy that's in their best interest. Are they going to get paid in the event that, there's a fire? Are they going to get paid in the event that, there's water damage, things like that? They want to make sure that the mortgage company is going to be paid in the event that there's some type of devaluation of your home, or the home becomes inhabitable, or the home goes into foreclosure. So you're not involved in the negotiation of this insurance, and whether or not they even there's any benefit to you it's up in the air. Sometimes it's even difficult, even after they place the insurance, despite the fact that you're entitled to it, to even get a copy of the policy to say, okay, well, what's in this? That in and of itself is sometimes a fight with the lender or their servicing company.
Then, okay, so my difficulty then is they're supposed to be covering so that they are also covered, right? They're covering their interest. Why would they do this? What would make a company decide that, okay, I'm going to take this insurance off, I'm going to put this insurance on, or maybe not take it off, but I'm going to take the first opportunity I can to put this insurance on instead, and then charge you more for it, but it may not necessarily be covering everything that we need there. Why would a company do that?
So I can speculate. It depends on the company. First and foremost, it's legitimate. It's a legitimate interest to want to cover your interest, but their interest starts and stops in the financial world, right? They want to protect. They have a mortgage against the property. They want to protect that mortgage that they have on the property, that encumbrance that they have on the property. They are not living in the home. They're not concerned with, neighbors and things like that. Their interest is for the most part, strictly financial. So you need to look at it. Their policy is going to read to their interests. That's number one. Number two, again, speculation, but, we believe that there are kickbacks from the insurance company. Again, we've seen situations where clients' mortgage payment will double from, a few thousand, 2,000 to 4,000 because, this lender-placed insurance has been placed on the property. And so there are a number of reasons. I'm not, each case is different, but I would suspect that there's some type of financial kickback or benefit to the lender to do that.
You see how she's being diplomatic? You and I could say something crazy, Agnes, like, yeah, they're trying to get more money, or they're trying to, force you to miss a payment and get kicked out of your home. But she's not going to say that because she's an attorney and like a real deal kind of attorney, right? That's fascinating. But yeah, what do you think?
Through my experience, I noticed that actually the relationship that the brokers had with the lenders that they kind of steer to which insurance company they'll be using. And when I told you about the experience that I decided to change and save myself a couple $1,000s a year, I had to get a permission from the lender to change the insurance company. Thanks to the good relationship that I had with the broker and broker had with the lender, they allow me to do that. Otherwise, I'll be paying over $3,000 more a year. Over $3,000 more. That's a lot of money to pay for the insurance a
Yeah.
year.
Yes,
So,
there's a lot.
in like Zakiya mentioned, yes, you have to just like, yeah, when you're choosing your own insurance, then you're using not only that replace replacement of your mortgage, but you're using for if you have to, that's when something happens, your hotel will be covered for a couple of months, or you can replace your fence, or you can replace something that you have on your yard. You have certain money accumulated for your personal belongings, your clothing, your furniture, and that is in your best interest. Nobody else will be looking after your best interest, especially not the lender, because they will just want to recover what they lent you, what they invested
Right,
in
but
you.
it sounds to me like you're literally saying the lender is directing and the broker are directing one another, and based on it. I mean, it makes sense that they have a good relationship, but it might be that they have a monetary relationship, and then there is that what we're okay, we're alleging that.
So
Counselor, is that possible?
No, no,
you
we don't
you
know.
can you, we don't know because each company is different. But again, I started at least in the foreclosure world in New York, representing homeowners that were affected by the housing crisis. A lot of them ended up in foreclosure for a number of reasons, but forced place insurance, lender placed insurance was something that you saw all the time because they were no longer putting money into the escrow account because they weren't paying the mortgage at all. And so, it's again, the fundamental issue is not that the lender is placing insurance on it, it's how it's done and when it's done.
Okay, so the issue
and what type of policy they're choosing as well.
Okay. So basically, you're saying it's not that they're not allowed to do this. It's just that it seems to be how they are doing it, right? It seems to be almost I'm going to use this word, a predatory.
It's definitely predatory. Yeah.
Yeah, you feel like it's
predatory because again, I'm trying to like rack my brain, and I cannot recall even a single case where it was a minor change. It's always something substantially more, always. And so the client is tasked with paying, if they want to get their mortgage back on track or they want to pay, the arrears, whatever, to try to get back on track. They have to account for this ridiculous policy that the lender has now placed on the property. And you would think, with all of their connections in the industry, that they would be able to get better deals. But it's always substantially more than what the homeowner can literally get just calling up the first company on Google. And so there's such a stark difference between what you as a homeowner can do as far, as finding appropriate insurance for your property versus what the lender decides to place the policies that the lenders place on the policy.
Okay. So I'm seeing you staying cool about it, but I know you have a passion for defending people who are in these kinds of situations in general, from defendants who find themselves in trouble. And it might be a minor thing, but right now, like you said, you actually told me about this, that there are people waiting in court for things right now because there's a lot of people lined up in court in Georgia for all kinds of things, and some of us may actually know what those things are, that it is a possibility that someone who who's getting a simple summons and couldn't afford to get out of it because they didn't have the money, they're sitting waiting for 60, 30, 60, 90 days because justice is just not moving quickly enough for them, right?
Right. So again, this is a situation with respect to mortgages. This is a situation where New York and Georgia are very different. I started in New York, which is practicing in New York, which is a judicial state, which means that you pretty much go through the normal process when it comes to foreclosure, normal in our world. Meaning, there's a summons, there's a complaint, there's, you go through the discovery of the evidence, exchange it. So it's a extensive process for a lender to get actual possession of a home in New York. You have to go through you basically get due process in New York when it comes to the home.
Okay.
That's always the case. It's not the case at all. We have this is considered a title state, or this is a title state where there are certain notices that are required. You do sign a waiver at the closing that allows them to essentially fast track the foreclosure process here. And so it's a lot faster, and that can be detrimental. When your mortgage goes up, I can speak for what we experienced personally. Our mortgage on a property where we did have an escrow went up from, I think it was like 1,000 to about 1,800 because the lender placed insurance.
Wow.
And this was a situation where we had not defaulted on the loan. We had not, so the escrow account was properly funded to cover our insurance policy when it came due, but the lender decided they didn't want to pay it. And as a result of that, our mortgage went up almost double on this investment property that we had. And so we were okay in the sense that we were able to cover it and not default before, the issue was resolved. But, everyone doesn't have that. And there's, again, there's a big, and they shouldn't have to, unexpectedly have their mortgage go up for no other reason other than, the lender either intentionally or negligently causing you to go into default on the insurance.
See, you went exactly where I was trying to go. I was going to ask you exactly about your personal experience, and that's the reason why she's passionate about this. Not just because it touched her, but I think that's what you do. And you do a lot of tort defendants. For crime in that area. You're mainly your mortgage and these kind of litigation. Actually, you're a litigation expert.
I'm a litigation attorney. Yes.
Yeah. But then on top of that, you do some defendant work.
I do. So I do civil and criminal, which is everything when you say it that way. But in the civil world, I don't do everything mortgage related. I do right now. I'm doing this lender place insurance issue.
Right.
In addition to that, I do a lot of contract matters, breach of contract things. That's usually it. Someone either breached the contract and trying to enforce it, or vice versa, or somebody's being sued because they're being accused of having breached the contract. But when I say civil, that's primarily what I do. Business, and this it touches on that. Outside of me having my own personal experience, we had the mortgage is at the end of the day it's a contract. And they agreed to do certain things. The lender agreed to pay the taxes, and notably, they paid the taxes because the taxing agency takes precedent in a foreclosure. They didn't forget that. But when it came to insurance, that was way cheaper. They magically forgot, and we were lucky because we have an insurance broker that called us and said, "Hey, your lender didn't pay," and we went ahead and paid them. For the full year, and called the insurance company, told them, this is what's happening. And it was hell for months. And I just can't imagine a homeowner that's, struggling to make it, or, not struggling. I mean, mortgages are usually your biggest expense. And so for that to double, that's substantial. And so, like I said, we were extremely lucky. I don't take that for granted, to be in a financial position where we were able to make those payments for months before bringing suit. But it shouldn't be that way. We should not. A homeowner who is paying diligently and doing what they're supposed to do, holding up their end of the bargain, shouldn't be suddenly, rewarded by having, their mortgage doubled because whatever reason. Because of something that the lender did that was incorrect.
Agnes, imagine that. She's an attorney and they did it to her property anyway. You know what I mean? That's in my mind. I'm just like, oh, did you not? It's like you're gonna go and mess with the person who, and you're looking at the deed. Well, I guess they didn't. Right, I guess they're not even checking to see.
I'm sure they didn't research before they start with Zakiya. They didn't research what she's doing for a living. Otherwise, they would step back and would not touch her at all. Right. But see, she was. That's great that she was able to take care of that herself.
Right.
What I know is like in New York, you're not going to see that, but then you will. I experienced myself in the past when mortgage companies were pushing, practically terrorizing. If you have some money in your house, why don't you use it? Trying to make you feel like you are a horrible person, that you don't want to take that money out and use for travel, for whatever, just to take more, just to take one, just to refinance and to have adjustable mortgage rates. And then 2 years later, you are in trouble and you're losing your property. A lot of people lost properties in New York. They were not able to do as easy. The lender placed insurance in New York, but then companies were attacking homeowners from other sides and ruining their the deals that they have. They have steady rates, and if you refinance, you're adding additional cost to your mortgage, at least $10,000, and then, of course, adjustable mortgage rates, which put you in trouble because you never know what's going to happen in life. Now it's okay. You don't know what's going to happen in your life 2 years from now, right? So then your mortgage automatically doubles, and then you are in trouble again. So yeah, as a homeowner, you have to be really on your toes.
Yeah, that's when I was in New York, that was actually the crux of what we dealt. Like I said, lender-placed insurance comes along with foreclosures because, again, you're not paying, and so that comes with it. But yeah, I had clients that signed second mortgages at the closing and didn't know that they had a second mortgage. I had, because it wasn't being described to them, or they didn't have an attorney that had their best interests at heart. Because sometimes certain industries are a numbers game, and sometimes real estate can fall into that. It's not, closings don't pay a lot of money, and sometimes it's a number game for the representatives. But I don't know. I mean, I haven't done that foreclosure litigation in New York in a while, so I'm hoping that the culture has changed. But I do remember when I got in, I will say it was the downfall, or with the effect of the mortgage collapse. And so I got to see people taking out I had a client that had a third mortgage, which was more than the first and second mortgage. I've never seen this before, and it was substantial, like just under $1 million. Third mortgage. So I've seen third mortgages rarely, but rarely do you see it so high that it's more than the first two combined. So they were allowing people to take out money, knowing that they would not be able to pay it back.
Right.
Then they would end up, like Agnes said, the adjustable mortgage is where they weren't they didn't understand what they were, they're signing it and it says 3%, and then they get their third payment and now it's up to 20%. It's it was definitely a tragedy, and we were able to help a number of homeowners come out of that, negotiate mortgages, facilitate a sale where at least they would get some of the proceeds and things like that.
Okay. All right. So if I'm looking out for this, Agnes is it seems like you're always on it. You're like paying attention all the time. Actually, that's a big deal in Long Island. Like I know at the end of like December, people start gearing up and lining up, sometimes sleeping outside of buildings to pay their property tax. I know it gets a little crazy out here, regardless. But in general, I'm looking for this. I want to make sure that this is not happening to me. What document? Where do I look for this? How do I find out if my insurance has been changed? I assume the first thing you'd notice is a change in how much you're actually paying for your mortgage. But then also, what other indicators would there be if I want to make sure that this is not happening to me?
For me, the one thing that saved us was our mortgage broker, our insurance broker. So I would say, if possible, develop a relationship with an insurance, the insurance broker, just so that should something happen, that they will reach out to you and let you know, hey, your mortgage company didn't pay like they were supposed to. Right. I would also check on your mortgage periodically, once a quarter, twice a year. It's not anything major, but you can just call the company that you have a policy with and kind of just go over the policy. Well, what does it cover again? When does it expire? What is the new rate going to be when we renew? And keeping that communication open will let you know that the policy is still active. You also want to make sure that the lender is on the policy. So during those conversations, that's what you can do. If you want to be more diligent, you can do it once a quarter. But I think twice a year is enough to stay on top of it. Okay.
All right. And if you happen to get into trouble with it, I guess they're calling you, right? They're definitely calling you and say, yes, hey, I've got this issue. Can I check it out? You want to give them a number? What's a good number to call you at?
You can reach me at my office number, which is 404-600-1771. My website, I also have a website. I don't know if we want to discuss.
No, we're ready for it. Go ahead. There you go.
Insurancescam.com, because it is indeed a scam.
Right.
Until lenders find a way to come to use their massive power to reduce rates, so I look at it as a scam, the whole thing. But if you're having issues and you need help, or even if you just have some questions, hey, this happened to me, we'll be happy to talk to you and help you through that. So I can assist you regardless of where you are in the country. So just give us a call. And if I can't assist you, I do have a wide network of other attorneys that may be able to assist. So please give us a call or visit our website.
Right. And you're kind of looking at this as, this is not just happening in one place, two places. This is kind of an ongoing pattern that you're looking for, right? You think that this is happening in more than one place, definitely in Georgia and New York, but then on top of that, to multiple people with multiple lenders?
It's definitely, I didn't get too much into it, but yeah, it's definitely happening throughout. I know it's happened in multiple states because I've seen some other cases where the attorney general from the state, so basically the state brought an action against the lender for these issues. So again, it's the issue is, I don't know if I clearly explained it, is when the lender is placing insurance on mortgages or obtaining policies, forcing the homeowner to pay it in situations where they should not be required to pay it. So it's where there is no lapse, or they have created, they being the lender or the servicing company has caused the lapse to happen by not paying it despite the escrow account being properly funded.
And the benefit or the result of this can be, one, that the person cannot afford to pay their actual mortgage now because the price has gone up. Then two, they could go into default. But also three, if something happens to the home and the insurance that they have placed doesn't actually cover the things that are most essential for that particular home, then now you're really in trouble because you can't afford to pay for a home that you can't even live in because your insurance won't cover whatever repairs are supposed to be done. Right? Did I sum that up right? Did that make sense?
Yes. I mean, at the core of it, in my opinion, it's just a breach of contract. You agree to pay the mortgage. They agree to, to take a portion of your mortgage, whatever that is, $100 a month or $200 a month, $1,000 a month in Long Island. To pay taxes, insurance. Sometimes the HOA is in there. It's rare, but it happens. But to pay third parties on your behalf. And so long as you're making the payments as agreed upon, they are required to pay when a payment is due. And when they fail to do that, again, whether intentionally or not, causing you to go into default, you shouldn't have to suffer those damages. So yeah, it can be all of those things or more. And the issue is, in my world, things tend to move. You kind of touched on it. They tend to move slow. So, you have, maybe you can make the first payment, but you're now 9 payments in, and, your payment, again, ours, we're in Georgia, is we got a great deal on that property. But it went from, like I said, $800 more. It went up $800, almost doubled our mortgage. And so yes. It's to being forced to pay that type of money over, the course of however long it takes to go through the process of trying to fix it with your lender, trying to bring a court case, the courts being packed here, depending on what county you're in. All of that plays into it. And all the while, you mentioned all those things, your credit is also going to take a hit if you're not paying your mortgage. So it has devastating consequences when lenders do this. And a lot of people don't realize that they have rights, that they too can enforce that mortgage agreement. It's not just for the mortgager. Right. So
if they're looking to do that, you think like something like this is happening, who are you going to call? You're going to reach out to Lender Place Insurance Scam.com.
I like the Ghostbusters in that one.
Yeah, that's just that. Sorry.
Right. You have no idea how lucky we are that we actually in New York, because we are more protected at the closings. We sign a lot more, but every single part is required to have an attorney present. Title company, it's extremely aware of a lot of things. That's why you pay them for extra insurances that they will take care of everything. But like Georgia, like Florida, in a lot of many states, it's so easy just to go, you sign and you move on, and you think you're going to live in your dream home forever after and very happy. And then things start coming. I mean, we didn't even have time to start talking about how people are stealing deeds, how there's so many different scams going on right now for homeowners that we do have to be very careful. Yeah. So, excuse me. Having good relationship with your insurance broker is one thing, but to know someone like Zakiya, that's the key to success. With any problems, then we can always reach out to Zakiya. So yes, that's wonderful. You're doing wonderful work, and I'm sure a lot of people is very happy and very grateful for your help.
Thank you.
I'm very proud. Listen, her dad's not my age, but he's a little bit older, and so when he told me, my daughter's an attorney, very, very proud of you. And then when I found out what kind of work you do, because I snoop around on the internet, I see everything because I'm checking on people's websites and their ratings on Google and everything. I'm like, oh, this person she's getting it done. And so yeah, ladies and gents, if you are looking for an attorney in Georgia, or you're looking for definitely someone who's doing some mortgage stuff here in New York, you check her out and find out what's going on. The show is, of course, Love, Death, and Taxes. I guess this was a taxes episode, right, Agnes? I guess that's where we're going.
Absolutely.
Yeah. Right. And it is sponsored by New York nytaxresolutions.com, which is a tax resolutions and bookkeeping. That's where you're going if you're going to be speaking with Agnes regarding issues that you have with taxation, especially if you have not been paying them, you own a business and they're coming after you, you're getting those calls, you're getting the emails, you're getting that registered slip in the mail about what's going on with your taxes from the IRS. If you are hoping to come on the show or hoping to have us speak about a specific topic, you want to reach out to us at mailbag@lovedeathandtaxes.com, because we've got an email box that's just waiting for you to send us some of that information. We are now, oh my gosh, we are now on live. Well, it's not live. It goes on like the next couple of hours, but we are now on Amazon Music. We are now on Spotify. We are now on Apple Podcasts and Google Podcasts as of this week. So if you want to listen to Love, Death, and Taxes in your car or however you consume podcasts, you can now request for that and look for it. And then you'll be able to hear all of this information that Zakiya explained a second or a third time, because I know some of you might need a second or third explanation for that. but it's good stuff. It was good stuff. Listen, yeah, I thought we're looking for issues that could affect people in this time. Right now, we have a problem. Right, in general, money is doing this wicked, crazy fluctuation. Crypto is unreliable, might all but be gone. All those NFTs, that whole new money situation is good. All of that is tumbling down. If you are putting your money anywhere, to me, sounds like real estate still remains one of the things that you should definitely be putting your money into, right?
Yes.
Right. So it is what it is. But ladies and gents, Zakiya, is there anything special you want to tell people right before we get to go?
No.
No.
I'm trying to think of did I forget something?
No.
I feel like I should say something, but no, just the short of it is if your mortgage goes up on it inexplicably, give us a call. So right. So be careful. Exactly. And Agnes, you have anything? Jean Dobre, you have anything to say to friends out there?
For this weekend.
Yeah, always, because they watch. It is not a question. Zakiya, we have like this dual people who watch. We got some people here who watch in the United States, but then we've got a whole contingent of them who watch in Poland as well, because that is where Agnes is from. Then I get the Jamaicans too, but it's not as many of them. They're like, "What is Ryan doing? I don't know what that is."
I made them watch.
Most of the time I think it's like, oh, I'm not going to spend my bandwidth on this right here. Ryan on YouTube. But it is what it is. Thank you so very much for bringing this to our attention. When I heard about it, I wanted to talk to you about it. And so everybody who I've spoken to is like, what? This is happening? And some people I've had to explain it 3 times to. So I'm really happy that you came on and did that and explained it for us. So I'm going to say thank you so very much for coming on today. Again, ladies and gentlemen, you're going to go to lenderplaced-insurance-scam.com if you are looking for more information about this particular issue, or you just want to reach out to Zakiya if you're in Georgia and New York and you want to get some top-notch legal work done. Okay. All right. That's it for us today. Ladies and gents, thank you so very much. Thank you, Agnes. Thank you again, Zakiya. All right, you guys take care. I'll see you next week.